All right, just making sure we're live here. I believe we are. Good morning, everybody. This is the morning show, Stock Market TV. Spencer, Steve, Chartmaster, Rick. JC is down in DC today, doing the Lord's work. One can only assume, but it's okay. We've got David Cox from Raymond James on the show today, and Dr. Phil Perlman, and of course Kenny Glick, and you. Good morning, chat. Everyone here. Let's do this. Let's bring on Steve and let's dance. What's up? What's up? What's up?
Good morning.
I just want to say, very nice job that you and Phil did yesterday on your afternoon stream.
You know, it's so nice having Phil around these days. I really enjoyed that video. We went for like an hour too. That's a lot longer.
We went for almost an hour, which is quite long, if I do say so myself. And if you don't know what I'm talking about, just click the link that I pinned in the chat.
Right? And you know, we really broke it down, some of our recent trades, and we talked about a trade that we just put on. Gave a trade out live, and it's working here this morning. So you definitely go watch that video. It's in oil and gas. Hint, hint.
Man, there's been a lot of individually, you and JC and Sean and obviously Sam and Jason, you're all kind of circling the energy sector together, right?
And yeah, that's probably fine. A lot of times we'll see the same thing, but the bullish evidence continues to build there. Day in, day out, week in, week out. Crude had some nice overnight action. If crude could start confirming some of the action we're seeing from the leaders in the energy sector, I think that would be really bullish. But if you look at the derivatives, something like heating oil, already really working. Gasoline, beautiful scoop and score, completed, on its way. So I think crude oil follows and starts to confirm all of this action that we're seeing. So yeah, I'm liking it more and more every day out here, Spencer. Loading up.
Yeah, I'm just looking at the sectors here for the last few months.
Also,
damn, I didn't realize just the last 4 weeks. I didn't realize how far ahead energy was over everybody. Frankly,
it's been good.
Yeah,
some relative strength just recently as well, and also excited for special guest today on the open bar.
Oh, I didn't know about one.
The one, Sean McLaughlin.
Oh, that's gonna be fun.
So Sean and I have done so many shows and podcasts together over the years. He is one of my dearest trader buddies. And, you know, choppy markets, times like this, Sean drops some of the all-time greatest trader wisdom, right? He's just a good guy to talk to. So I thought, who better?
Awesome.
So we're going to kick it around after the show around 9:45.
Great.
Yeah.
Yeah, you know,
letter?
Did I read Buffett? Of course I read Buffett's letter.
Okay. I want to talk.
One of the beautiful things, one of the great things about Warren Buffett's letters is that he basically says this. Every letter says the same thing. Okay, they all say the same 3 to 6 things. Okay, but he says, A, he sprinkles in like folksy stories that you've never heard before, and B, he finds a way to say it differently every time. Okay, so even though you've heard the same thing 100 times before, it still kind of resonates because he says it a little bit differently. So
you could tell that he loves to write too. I think he's going to miss doing the annual shareholder letter. So that'll be a big change come next year. But he said he's still going to, you know, kind of get his thoughts out and say hello each year with his little Thanksgiving letter. Did you see he talks a lot about how important it is to just be kind in life? So he's always good for
the golden rule. Don't forget the golden rule. What I love most, I think, is find me another CEO that will come out, or any executive for that matter, that'll come out and say, our business, and I'll quote him directly here. Berkshire has moderately better than average prospects. That's what he said, led by a few non-correlated and sizable gems. However, a decade or two from now, there will be many companies that have done better than Berkshire, right? Who says that? I love that.
Brutally honest.
I love it.
Yeah, well,
Yeah,
he knows
we have moderately better than average prospects.
He's been talking like this forever, though. You know, 20 years ago, he wasn't out here like, hey, we're going to beat everybody.
That's right. That's right. What he does go on to say after that, like a few paragraphs, or actually in the very next sentence, which is Berkshire has less chance of a devastating disaster than any business I know. And some of it is just the bottom line: buy Berkshire, buy America, you'll be fine. That's the message he wants to get across. But yes, I love his letters. They are repetitive, but new at the same time. So.
No, they're good. They're warm-hearted. Is Berkshire like one of the great American brands at this point? It is.
I don't know. It's definitely a great American company.
For sure.
It's not a brand per se.
Yeah. It's got like the real estate, and like you'll see the Berkshire Hathaway logo around.
I do see. Yeah, you see it. You see it around. But
you're right. Not like McDonald's for sure. All right. So my favorite part was also like one of the life lessons. He said, you learn things in the first half of your life that you put into practice in the second half. And that kind of made me feel good, because lately I've been feeling like I don't read anybody anymore. I'm not learning like I used to. You know, I'm not listening to podcasts and reading. There was a time not long ago, Spencer, I was working with Patrick at the Chart Report. I was reading everything. All of our friends, great analysts, just devouring information. And I'm like, now I don't have fucking time. But I'm just applying it all. Like I'm spending all day applying the stuff that we've spent years learning as analysts. So I thought that was pretty cool. I'm like, okay, Buffett approves. Because sometimes I'll be like, you know, I'll hate myself for it. Like, you don't read anymore, you know?
Yeah. Yeah. I mean, I feel like I'm going to spend my entire life trying to get good or trying to get better at time management. I will try forever. I'll probably get a little better. I hope I'm better now than I used to be, and I hope I'll get better than I am now. But I will try forever to get better at that. And
it's a tough one.
I will probably fail.
It's a tough one.
That's okay. Anyway, yeah, love Warren's letters. Look forward to the next one next Thanksgiving, and because that's all we've got now. So
hey, can you explain? Moving on.
Sure.
Can you explain to someone who doesn't give a shit about baseball what this pitching scandal's all about?
Yeah. It's actually a pretty interesting lesson in incentives. So essentially, prop bets is the bottom line here. Okay, you can prop bet anything, including the outcome of a specific pitch. Okay, you can prop bet.
Pitch by pitch.
You can prop bet. The first pitch of the inning will be a strike. The first pitch of it will be a ball, and that gets people in trouble. Okay, so these two guys were caught up. They were throwing balls intentionally, or at least attempting to.
Apparently, the market value of these bets is like such small potatoes that people are like, "Were they really doing this? Do I have that right?"
No? Yeah, and it's a great lesson in incentives, because if you break, especially the one guy who was actually good, Class A, if you break out how much he got paid per pitch versus whatever kickback he would have gotten on this, you know, it's peanuts, right?
Ridiculous. Yeah. So, wow.
Yeah.
So they're in big trouble then. Those two guys.
Yeah, they're gone. Goodbye.
Yeah. Okay. DraftKings probably bottoms on something, on some sort of news like this. You're kind of seeing a massive.
I don't think we've seen the last of this.
I mean, this news is never going to stop, though. This is never really going to end. Ever since the betting platforms came out, they launched these prop bets, and then they slowly go away. It happened in college too. We used to have prop bets in college. They shut that down pretty quickly. You can still bet on the next play in football. That's pretty aggressive, but for sure. I thought that was interesting.
Speaking of DraftKings, obviously DraftKings had a great day on Friday.
was earnings. Yeah.
They had earnings, but then also they announced the thing with ESPN. And I don't know if you saw that. I was surprised that Flutter didn't really react at all to that headline. DraftKings is now the new official sportsbook of ESPN, and Flutter didn't budge. Actually, it went up. So,
speaking of ESPN, these pricks. I mean, forever, for as long as I can remember, they're always fighting with people and price gouging. Even back, Spencer, when we used to watch ESPN on cable.
Yeah.
Do you remember the problems that they would cause for cable packages?
Yeah.
They would carve out ESPN, carve out the sports package, pay more for the sports package. It was always ridiculous.
Yeah.
So Disney's been doing this forever. And right now they're really fighting with Google, and it's affecting my life, frankly. Can't watch football games. College is a mess. Can't even get the college games on YouTube TV anymore. So the bottom line with that is this is just a part of business. If Google really wanted these games, there's a price they could pay. They got a fuck ton more money than Disney will ever have, right? So this is just kind of like going back and forth and negotiating and not wanting to pay too much and being sick of, the price gouging that Disney does for ESPN. And Google can talk.
Time is a flat circle. Time is a flat circle. Nothing ever changes. I do want to talk about like junkie growth today. There's a lot of headlines on that front. A lot of individual stocks. Okay, you had earnings from CoreWeave here down 8% this morning. Do we have a CoreWeave chart? I'd love to get one. If not,
you have about data center build out something.
It's going to take longer than expected to build out this data. Even though the guidance came in, like the numbers themselves were actually all good. Wow.
Rocket Labs, pop.
The Rocket Lab, right? That was also on the list. Rocket Lab's up. We'll call it 10% now.
Not bad.
Right? 9%.
Yeah.
On the report, you got the Big Bear. Don't forget the Big Bear AI, guys. The BBAI up 18% this morning.
Don't never forget it. Never forget the BBAI.
Oh.
Yeah.
Wow. Look at that stick. You had I saw AI. Why was AI on my list? Is it C3 AI? They had no. Did they have something? They were on my list for some reason. I don't know why. Okay.
Yesterday.
Wait, what else? Oh, we had Rigetti, right? We had the rigatoni.
Did we?
Why'd I see again? I write these stocks down when they're on my list, and then I forget why they're on my list from like an hour and a half ago.
Oh yeah, EPS of -3 cents, beat by 1 cent, revenue miss. That's all I got.
How are you feeling about this area right now? You're still hands off, still out of it?
I think you got to be a little careful, but some speculative growth areas are shaping back up, or at least trying. But quantum still looks pretty crap. You look at something like these drone stocks, still pretty crap. Bitcoin miners holding up probably better than most. Look at the new nuclears, something like SMR, NNE, even Okilo. Okilo's 50% off the highs. Doesn't look nearly that bad if you just look at the chart. Down 50%, and no signs of that stopping quite yet. So I think you got to be careful with speculative growth. Pick your spots. Look at solar energy. You could almost throw a dart at solar energy right now. Look at something like Canadian Solar. I mean, these stocks are just running, absolutely ripping. Even First Solar.
I don't know, man. Actually, that Oklo, that's got a tradable low right there. Ooh, $100?
It's trying. They have. Well, this is an earnings reaction, right?
Oh.
So you could get some action there today. But look at something like SMR, right? A very close peer had earnings a few days ago, completing a top.
I could take a flyer on that Oklo. Who's with me?
Take one. Do it. Spencer, do you own enough Baidu and Alibaba?
No. But
thinking about loading back up.
They haven't. You're reloading up. They haven't been doing a whole lot.
I'm dipping my toes in some calls. You like Grab for a Southeast Asia anchor play? The Grab Holdings, the Uber of Southeast Asia. You like that one? You like a good trend reversal? Do we have the grab chart,
That was a
Spencer?
big candle yesterday. What
We
happened
gotta
there?
get we gotta get Spencer more Asia exposure, Rick. Can you throw some Asia up?
No, I don't need more Asia. I mean, maybe I
You
don't
need
know.
more Asia in your life, I feel
I
like.
I need more speculative, flyers is what I need.
C limited with the wide range freaky deaky doji candle this morning on earnings, right? I like to chart these things pre-market. You look at that price action, C limited this morning, yowza. Hit a low of like the low 140s, and now it's pressing back up towards 161, 162. It's just running here this morning.
It's kind of the same story.
C
Tradable
limited
low.
special stock. Did you know?
What's special about it?
Online retail, one of the fastest growing regions of the world. That doesn't excite you?
No, but yeah, it does. Speaking of e-commerce,
Yeah.
that Jumia
Really good stuff.
Jumia looks juicy.
Ooh, the Jumama?
Yeah.
This thing's been going, right? Oh, coiled up, Spencer. You're right. I got stopped out of this one. I was too soon. I was too early in this one. Got stopped out last year. Thought the reversal was on. It wasn't. Went down for a
Oh,
double bottom move.
yeah,
But it
that
looks
big
great.
that big August stick. Yeah.
Yeah, I got stopped out on that giant gap down candle, and
Uh-huh.
yeah, August. 54%. So I haven't thought about this stock since. But
Yeah,
expected
Jumia.
growth.
Damn. Okay, I need more flyers. I don't have enough flyers in my
No,
life.
seriously, Grab's a good one. C Limited is a good. Those are the two absolute favorites.
All right.
Southeast Asia anchors right there.
Did you see the Coinbase news this morning or yesterday? Whatever.
Relaunching, going back to the ICO market. Is that something like that?
Yeah. Basically, IPOs, but for tokens, right? So you can buy a token on Coinbase before it's listed.
That's awesome. Good for them. Good for them. You got to give the people what they want, okay? Or somebody else is going to do it, or your competitors will.
Can I say the magic words? This will end well. I'm just kidding. I don't actually believe that.
Hey, Coinbase tends to have a much higher line than some of these other platforms. So I would imagine that however they're doing this, it's above the belt.
I'm sure it's fine. I'm sure it's fine.
Yeah. Sure, it's as appropriate of behavior as you're going to find on any crypto platform.
Mm-hmm.
As responsible, I guess.
Oh, I didn't realize that SoFi launched a crypto thing. I missed that.
Yeah, they're bragging about being the first something crypto something.
Damn.
So customers could just trade crypto and bank in the same account. That's sick, by the way. Right? If you want to think of Bitcoin as like a form of cash, and you have some sort of savings account that you want to, don't they offer like a high yield checking rate too?
Yeah. Well, checking
account.
Yeah. That's what I have.
So you could do that and then also own some Bitcoin, like a sleeve of Bitcoin. That's cool. I like that. People will do that.
I'm not trying to mix Bitcoin in my like checking account.
Why? Money is money. Money is money. You want to view your investments as something that should be highly liquid and can be turned to cash soon or immediately. So why not have them in the same account? Years ago, I held Bitcoin and Ethereum in my PayPal account. I don't care.
This like violates like fundamental principles of personal finance, right?
Lose those fundamental principles then. They're stupid. Why can't you own Bitcoin and cash in the same account? I think that's cool. I think that's convenient.
Okay, you can do that. I will pass on the commingling of my Bitcoin and my checking account. The money that pays my bills.
You're not a securities broker. Commingling. Nobody cares if you commingle. You could commingle.
I care. That's my point. I need to pay my bills, man. I can't have Bitcoin go down to $90,000 and all of a sudden I can't pay my bills next month.
I'll commingle the hell out of my personal assets. Come at me. I'm allowed to. What's wrong with you? Bitcoin, cash, stocks, trade a little options. A little spice is nice. Right there in the checking account. Go SoFi. I like that. Degenerate economy improves.
Not for me. These are things that happen in bull markets for sure. By the way, you won't see this
again. It goes back to what we were just saying about Coinbase. give the people what they want, and if you're not going to do it, your competitors will. Some of these new fintechs, this is how they gain a competitive edge. It's by innovating, just doing new and different things, making customers' lives easier, more convenient, user-friendly platforms, right? No?
Well, it's definitely user-friendly, I can tell you that.
But this is how companies like Robinhood have come out of nowhere. Simple little innovations like this. So, I don't know. Trying different things. I'm all for it. I like that. I think SoFi is very well run. This is another leader that doesn't get talked about enough. Anthony Noto is a great leader. This guy's been around forever. Former chief financial officer of the NFL, then Twitter, now runs SoFi. Good leadership. Good chart.
Yeah, like this is probably one of those stocks where, like, you had your chance. You had 2.5 years, right? You had 3 years to buy this thing. I don't know if you'll ever see those prices ever again in SoFi, to be frank. And I said that as somebody that rode it up and then down. So, I bought this off of the SPAC merger. I rode it all the way up to, like, mid 20s. Rode it down to like 15.
That's all right. Hey, that happens. SPACs, no challenge. Gemini credit card? That sounds cool. I'll get a Gemini credit card.
Is SoFi the next JP Morgan? Hey, people are saying, right? I don't know. Okay. Kenny is apparently not in today. I did not know that, so I apologize. We'll have to find out what Kenny's doing tomorrow. What he did today, tomorrow, or tomorrow today.
Oh, no, Kenny.
No Kenny.
I'm later this week.
But I do want to mention, if you want to trade live with Kenny, starting, and you're not in the room, that's fine, because starting every Thursday night, he does a schmooze. He does it at like 8:00, and then we're going to put that schmooze on our site. And then from this Friday until next Thursday, we're doing an open house. So his room will stream live on our site from 9:30 to 11:30. Friday, Monday, Tuesday, Wednesday, Thursday. So if you want to, if you're not in Kenny's room, you've always wanted to check it out, but you just haven't pulled the trigger, whatever, it's going to be right there on the site. We do this probably like twice a year, maybe every 6 months or so. The link is on the screen. Check it out. Again, totally free. You'll get the watch link emailed to you when you go to that page. And again, starting Thursday night, Friday morning, Monday, Tuesday, Wednesday, Thursday. So that's the open house. And in the past, we've done this to a great fanfare. People love it. And some of them find they want to keep going. And that's totally cool. So that's what we're doing this week with Kenny, or next week with Kenny. So check it out. Link is on the screen. We do have David Cox backstage, so we'll bring him on in a second. Let me make sure I covered what else was on my list.
Nice beat by Occidental Petroleum.
Speaking of energy, I think I had it all. Hold on a second. What happened to my dude? I have too many tabs open. I can't find anything. I don't know. Forget it. I know what I was going to ask. I tried to ask this yesterday. Do we think that was the shutdown bottom right there on Friday in the indexes?
Probably.
Was that it?
Probably. Yeah. We'll see.
I kind of think so.
Why is the bond market closed today?
It's Veterans Day, man.
Oh, bond market's closed. All right.
Yeah. Thank you to all our veterans. We should probably say that part out loud. But yeah, bond market weirdly has more holidays than the stock market. I don't really know why.
Yeah, a lot more.
Yeah.
I bring David on.
All right. David Cox, portfolio manager, Raymond James. He's here. And let's do this.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
David.
Morning.
Hey, David. How you doing?
I'm good. You?
Good.
Nice.
David, before we start, JC wanted me to give you props. He said that before you, he refused to look at quarterly candles, and you convinced him. So he thanks you.
That's funny. He does look at the quarterlies now. Wow.
So
he got
he wanted me to say that first and foremost.
Cool.
He's sad he couldn't be here. So I guess thank you.
I get, we all need more charts in our chart book, right?
I don't know.
I've got unlimited time, but yeah, I'm sure you guys do too.
And then the quarterlies, or no?
Okay.
Do you peek at them, or do you wait until the end of every quarter?
You know what? Quarterlies, no, I don't peek. Monthlies, I'll peek.
Yeah,
I definitely see monthlies. Weeklies, I peek. I peek. I know it's chart crime. You?
We all do it.
Of course we do. Right?
Great. So what are you peeking at these days? What are you seeing out there? We've been having some really good discussions about market internals on the network lately. I think, I don't know. I think the community is pretty mixed on where we're at there. So
yeah,
why don't we start?
Well, I think that the trend, always kind of to me is front center. So, to me, like, last week, right? It looks like a pullback in an uptrend, the markets. So what are you supposed to do? Like, I like to buy pullbacks and uptrends, and I certainly don't want to take risk off. And it's funny, someone sent me an email on Friday or something, client, and was like, oh, the shutdown. I was like, oh, the shutdown. I was like, I don't follow that, right? So, at this point, I just posted this morning, like technology, utilities, doesn't matter what it is. We're talking uptrends and pullbacks and uptrends. And I think what I like to keep mentioning, because I think people are somehow not involved with gold bullion and gold stocks, frankly.
Yeah.
They just pulled back. They peaked a little earlier, right? And it looks like a pullback to me. Certainly, you look at those weekly charts.
Nice one.
Absolutely.
Back above VWAP from the peaks, everything, gold, silver, gold miners.
Totally. And I don't know, at this point, I think it's fair to say they had a huge run, right? And there was some selling last month, but looks pretty good. Looks like a short-term sell-off and or short-term correction and a intermediate-term, long-term uptrend, in my opinion.
So,
David,
you're buying dips and leaders. I like
Sure.
it.
Yeah.
Sorry, Spencer.
No, that's okay. What are your indicators to know when it might be more than just a simple run-of-the-mill pullback?
Well, for sure. So I often refer to like what I call the biggest bar against, which is really just a, candlestick that looks unusual, right? So, we can get more specific and say that's related to ATRs or, whatever, but we're just looking for a range that looks unusual, right? So just, use gold as an example, when you have that, what is it there? The 21st, right? Like that's an unusual kind of bar. It's not huge, but gold stocks themselves, maybe I should have started there. Yeah. You know what? Sorry, let me back up. Let's go to GDX or something. Right, if you look at GDX,
21st, you're saying?
What's that? No, look at the 17th. Gold stocks actually, I think, peaked a little earlier. Look on the 17th, right? And you can see that was follow up to the 9th. Both those candles catch my attention, and so the way I operate, the 9th, I'm taking profits some, and then by the time you get that second hit, usually comes with a bearish divergence, right? You got slower momentum, and boom, you let it go on the 17th, and then you sit here and you watch, and so. To me, knowing that any short-term peak can turn into an intermediate-term peak, can turn into a long-term peak, I like to adapt on every high and every low on the opposite. And so now it needs to prove itself. And I think it's fair to say the last couple of weeks look pretty constructive on the pullback. And so
I love how you're just using candlestick analysis to point out a change in character of the market, really. So he's talking about like some of these volatile candles, and if you look at the S&P 500, you had something similar, say October 10th, right, when we were down 2.7% in the S&P.
totally.
And you would think, okay, volatility's picking up. That's probably not the end of it. Am I right? That's kind of the line of thinking.
Absolutely. So yeah, the 10th, good example, Steve. So the 10th of the S&P. Again, I tweeted that day. I said that is a top, but we don't know, what that means. So there you go. We went over it soon after, and that's bullish. Obviously, highs are bullish. But yeah, you're trying to get character change. That's
great. So do you think maybe that was it? And the dip is in, looks like a tradable low for sure. S&P went on to make new highs. And then things like technology beneath the surface looking really strong as well here. I'm starting to confirm that.
Yeah, totally agreed. Friday's behavior was really good, right? So, again, I like to use, I use some oscillators, and I'm an RSI 5 kind of guy, right? So shorter than most, but that
on the daily.
I use 5 on the daily. I use 5 on the weekly.
Wow.
In fact, weekly RSI 5 sell-offs don't happen a whole lot, to be honest.
Yep.
But when you look at the the S&P and the Qs, they were both RSI 5 oversold Friday morning, peaking at the daily, I should say, peaking at the daily because they didn't finish oversold, if you will. But you can see as well as I can that the reversal, all those accumulation, that was a lot of buying came in. So that weakness was bought, and this is why, to me, it's so easy to get caught up, right? I think a lot of investors, because I can look at my feed, I can see it. People are getting super bearish, like this shutdown or whatever it is. They're talking about it, but the market's already kind of come down. And when you're already short-term oversold in an uptrend, like let's not get too excited, and let's remember that the last thing you want to do is sell your merchandise at the low, right?
I like that. RSI 5. That's fast, though. That is fast. I like that.
We each need our own, basket, right? On the weekly, it's a little slower, right?
Yeah, for sure. Do you find yourself using like a PPO, MACD, any sort of like crossover momentum sort of indicator as well? Or no?
So I use MACD, but I don't even really pay that close attention to the crossovers. I look at the histogram, which is again just the distance between those two lines. And so I do like to see a rising upticking histogram. And so, again, if I was, let's say, managing assets for a more conservative client, I'd like to see that weekly tick up, which, for the record, this morning we still don't have on a peaking basis. But the MACD dailies have certainly peaked up, or ticked up rather, right? Which to me is again positive, because that's what we're seeing those averages start to move back in the right direction. But trend always overrules, right? So again, I don't want to get too negative just because it's gone up a long way. But at the same time, just going back to what you said, those biggest bars against, which we're talking S&P at the 10th, that stands out. That's not going to disappear on the chart. So we're going to keep it in mind, because who knows? If we end up a month from now saying, oh, wow, that looks like it was important, the shot across the bow, well, we're going to want to sort of at least continue to acknowledge.
I love that. Love the way you're thinking about that.
David, can you speak a little bit about sector rotation? We were talking about energy, well, actually every day, frankly, energy. But can you just comment on that and what it's doing to the averages?
You asked, is that a Canadian question, Spencer?
I mean, no, but now it is.
Well, I maybe I'm going to turn it into a Canadian question, although I always feel bad because I get the feeling that, like, as Americans, you guys can't buy the Toronto stock market easily or something. Is that true? Like, you just can't?
We can buy EWC.
Yeah, but that's a New York listed. That's not the same thing. So I mean, just this morning I just posted, look at the mid caps on both sides of the border. So if you think U.S. mid caps are interesting, well, shoot, you better look at Canadian small mid caps, because they're an uptrend and they look a whole lot better than the U.S. mid caps. So that's XMD in Toronto. So we obviously have different, very very different sector compositions, right? So I mean, Toronto has been a long-term dismal underperformer, right, for quite a long time, until really the last year, when it's perked up. And so again, because we've got a much heavier component of energy and materials, it's kind of always offers that kind of commodity themed trade. And I think that's important to kind of remember. At the same time, when you look at this market, like just looking at the 11 gig sectors in the U.S., I mean, technology, communications shows up, but it's pretty heavily concentrated in a couple names. What else is like relatively rising, right? And it's a bit tough. I mean, there's these baskets of performance on various timeframes. Like energy is a timeframe thing to me, because big picture, like it's not happening. I will make a comment here about the TSX, Canada versus the US, is that if you look on the long term, Canadian energy stocks are broad-based ETF versus yours better on all timeframes, like all the way out 10 years. If you look at the material sector, ours is way better. If you look at the staples sector,
what's different?
Well, what's different? First off, your energy. I don't know what's different. I mean, we have interlisted names that I'll bet you are in your XLE. I don't know what to say. Obviously, from a pure, like, if we're just thinking about what the deal is, well, we've got all this heavy, dirty oil. Like, I don't know what to say other than that. And I'm not saying that sort of makes it in demand. I have no clue, really, right, from that perspective. I'm just looking at the charts. So
you're talking about XEG, right?
I'm talking XEG. Yeah. Mm-hmm. And if you compare it to XLE, and if you look over, the long time frame, even when adjusting for currency, you got to understand that the truth is, U.S. investors looking for energy should be looking at Canadian stuff. Now, some of the names are already, you guys are following them, right? Imperial Oil is IMO, trades in New York, and it's like, I think it's pretty close to highs. Just went to highs, right? So staples, Again, obviously I don't really prefer staples. They're not performing well relatively, but Canadian consumer staples crushed the US over the 1, 2, 3, 4, 5, 10-year time frame.
That's
So
interesting.
anyone that's sitting here in the US trying to be defensive in their portfolio, I mean, you better know about the Canadian staples,
Yeah, but those are baskets that we can't easily buy as U.S. investors. Something like XEG, unfortunately.
How is that? I don't understand. See, to me,
Straight,
buying US stocks is just
I don't.
normal. Right?
I'll have
It's
to check
weird.
Interactive Brokers. I just checked Schwab. I don't have access there, and just a standard retail brokerage to any of the capped indexes.
Right.
So, no, but you go out and buy the leaders, right? You go out and you buy IMO and some of the other ones. CNQ hasn't been as good. That's been a laggard, right? I know.
Yeah.
I was looking at that recently,
Totally.
but that's starting to shape up too.
Yeah, totally. I mean, they're all going to obviously come along, right? If it ends up coming along, Suncor just I think popped up the highs there in the U.S. So that's a dual listed name. But again, I think that our banks, we've got some pretty strong banks that trade in New York, right? All the big banks trade in New York.
One of our analysts, Sam, has been pounding the table on the Canadian banks. They've been so good. How many do you guys have out there? 5 big banks?
Well,
6?
people say 5. I usually say 6 by default. I don't always take
Same
time to add
thing
it
as
up.
here, really.
Yeah.
But they're the only ones.
Totally. I mean, I think that it's fair to say I think that there's some kind of rate mortgage housing developer issues going on here that, frankly, I think the banks have a lot of exposure to. But again, it's kind of more a fundamental conversation.
They're saying similar things here, David.
Yeah, no, totally. They say lots of things, don't they? So, and a lot of it's fun and entertaining, but the charts matter. Price matters.
By the way, chat saying you can buy TSX on Interactive Brokers in the US.
Yeah.
So
there you go. So you got to go to one of the professional brokers then.
Yeah. David, as far as the sectors, at least in the US, are concerned, what do you like in the next 3 to 6 months?
Well, I think that first off, I think the technology discussion is sort of, I think it's easy, like even in my mind, you can think, okay, it's all technology, but the problem is that the financial sector, I mean, the utility sector, all the sectors have, whatever, right? Technology related stuff, right? They've all got everyone's AI theming everything these days. And so the reality is that I tend to sort of more think about it from almost like a growth perspective, right? So, this year we've had a pretty, I think, impressive breakout on, the RK as a basket of trying to understand, the growth or speculative growth theme. And I think that's just pulled back recently. And I think that if you look at all the ARK funds, like to me, those are good proxies for kind of what's going on. And they have stocks from different sectors, right?
They're good proxies for the most risk on areas of the market. Right? Great information.
Totally. Which I think gives us information about the broader market, because if the broader market's going to suffer, well, then RK can't be performing well. I don't think. I think that I think the EV car stuff, I think this is interesting, right? I mean, Tesla's been a pretty strong stock. And you're starting to see, I know you guys were talking about China this morning, but you look at, NIO and XPeng and Ford, GM and Rivian.
Yeah,
absolutely. Look at the base on Rivian. Look at the weekly chart on Rivian.
Love the chart of Rivian right now. Yep.
Yeah.
We've been looking at those as well.
Yeah, I think that's a space that's kind of interesting. And, yeah, I think it's important.
So would you say, because we were talking about this earlier, right before you came on, and I said, Spencer, you got to probably pick your spots a little bit more selectively in speculative growth. That's how it's feeling for me. Would you say it's mostly just standard rotation? Stuff like the new nuclears and the quantums are cooling off, but fine. We got the EV space and other stuff heating up and picking up the slack.
For sure. Steve, let's be honest. I mean, I think that mostly happens, right? Yeah. We're still in an uptrend. So yeah, stuff's going to rotate in and out. And obviously if you're in the, the more growthy themes, sure, they change, right? The industry groups, I mean, clean energy and solar, those are happening. I know you guys mentioned those too. And yet some stocks can fall away, right? Like you look at I think DoorDash and, Duolingo and Roblox had some pretty weakness. So that's, these things rotate and they can have negative earnings reactions, but that doesn't have to upset us about the market. It just means, the stocks changed. So who cares? There's lots of stocks.
How are you thinking about, the biggest and baddest stocks these days, the Mag 7s? It's like mega cap growth is back in the leadership role, really since the April lows.
Yeah, absolutely it is. So, I mean, again, just from a pure, wanting to understand the market, I mean, you can't deny, just maybe use the MAGS ETF, right? MAGS. I mean, relatively outperforming the SPY, relatively going up on all time frames. Like, what more is there to say, right? So, would there be, would I have a preference if I was having to sort of go and decide to buy Meta or Google? Yeah, of course I would, right?
Yep.
Which is just going to be chart dependent. But I mean, you can't say there's anything wrong at the mega level, and certainly I think the argument is long gone that the mega is driving the market. I think people will know better, or should by now, right?
Yeah, and you continue to see the usual rotation there with stuff like Microsoft cooling off a bit. Meta got hit recently, and go look at Google. Incredible. So
For sure.
Tesla's coiled up really nicely as well.
I agree. I mean, it seems to be on the cusp of some kind of move, right? And it's not that far off those prior highs even, right? From last end of 24, is it? Just looking right now.
It's interesting that you point out some of the, I guess, picks and axes or smaller plays in that space, because it's like Tesla drives that whole group, right? So it's almost like you would look at the market and want the Mag 7s to be leading and doing well if the broader market's going to do well. If Tesla's not working, you don't expect something like XPEV or NIO or Lucid or Rivian to be working. So that would be meaningful for these other ones that we're talking about.
Yeah, absolutely. Yeah, no, I think it's just an industry group, kind of niche of whatever, whether it's industrials or technology. I mean, this is what I mean, right? These car companies, I don't even know what to make of them in terms of right? Is it technology? Is it industrial? Is it what is it? Does it matter?
Hey, which one's Rivian, Spencer? Is that the trucks? That's the one that makes
they're really good-looking SUVs.
They're cool. They're nice, right?
I've never been inside one, but they look very nice.
Yeah, I've seen. Okay. We've got a few in Canada. We've actually seen. I haven't looked at Lucid in a while. I think Lucid is crazy weak, isn't it? LCID. Oh,
yeah, that looks like crap.
But
my take on Rivian is like, hey, give them credit, because at least they're still around at the valuation that they have. So even just existing, right, it frankly is a win for them, right? I think they're still losing money on every car they sell, but the fact that they are still the size that they are, when everyone else, a whole bunch of those EV stocks are not even around anymore from that COVID EV boom. Right.
Absolutely. But I think this is just maybe an example, right? People get excited about these cars. Maybe they're excited about green energy themselves. You have to always separate yourself from, the investment opportunity. You can, I don't know, in this case, drive a car that you like, but that doesn't mean the stock is worth investing in.
That's a very good point. Very hard lesson for me to learn. But
for you to learn. Dare I ask what you drive?
Oh no, I drive a Ford. That's not.
All right.
But yeah, in just in terms of companies you like, products you like versus stocks you own, right? David, what about Bitcoin? What are your thoughts there?
Well, I kind of, I remarked on Twitter on Friday, the same thing. You get all these people that get kind of, these sensationalist sort of, whatever, crashing, falling. Like, put the monthly chart on a Bitcoin. Like, there's nothing to discuss. It is what it is. It doesn't look like anything. So going back to that logic that we were talking about, Steve, you were talking about the biggest bar idea. So, take a look at the bigger chart on Bitcoin, and it doesn't matter whether you're looking weekly or monthly for that matter. There's no, this is nothing. This is just, This isn't something exciting. This is just nothing. It's just consolidating.
You're right.
It's fine. There's nothing to see here. And I think what's most important is to sort of, at some point in the future, of course, there'll be something to see. But if you go and put a weekly chart on of just, Bitcoin, or it doesn't matter what, but you brought up Bitcoin. If you put a weekly chart on and you look at all those prior, years ago highs, you'll see that there's usually the appearance of unusual price activity with a change of character candlestick, which says, hey, something's changing. I don't really see that right now at all. And so I'm not going to get excited.
I love that.
Yeah.
David, one thing that we'll use as a nice simple tool to help us identify what you're calling just unusual candles, unusual price action, is short-term rate of change. Do you ever do that? Like, we'll throw that up there almost to make our point when we're publishing or writing a post and show, hey, this is the biggest day and whatever, the biggest 2 days and whatever. That's unusual. See that pickup in volatility, change in character, yada, yada.
Yeah, well, I mean, I think you're measuring the same thing in theory. It's not how I measure it, but I think you're absolutely right. It's the same thing with, going back to RSI. When you have an RSI move for the first time in a while, right? So you have an uptrend or whatever, and suddenly you have RSI goes oversold for the first time in the rally. That's whoa, momentum's changing. I think you'd see the same thing on the rate of change you're referring to. And I think, frankly, the candlestick you'd see too. It's just without the data, to me, if I was stuck, I'd actually rather have the actual candlesticks in front of me than the data. because I think it's easier to kind of see. And I think that, again, we don't even need to get granular, right? As you already pointed out, like you can look at a candlestick chart on a weekly basis. You can take every single line and indicator off it, and you can see if they're big, if they look unusual, and if we're going to have to acknowledge down the road that, that was unusual. And so I want to make adjustments when that's happening in the now, not sit around till, a year later making complaints.
A lot of people who are new to technical analysis will throw all these indicators on their charts and not even pay too much attention to the candles in the first place. Candlesticks alone, right? The far superior to something like a line chart. They are packed with information about the price action, the tape, what happened that week or that session. So you could just hang out right there. Steve Nissan has a great book. There's plenty of good books written on how to analyze candlestick patterns, and there's plenty of signals just there. You don't need indicators.
For sure. And I mean, you can look at Steve's book, and you can get way more involved than I like to, because I don't want all these silly pattern names. I just want to know big white ones, big black ones, red, black, green, whatever color they are, but up and down, and range is super important. I was in at the CMT conference recently in Dubai, and did a presentation on risk, and we were talking about average true range, which again, we're measuring the same thing. When you're looking at that unusual move, right? And this happens for tops and bottoms, where suddenly that demand outstrips supply or supply outstrips demand. We all need to notice, and we all want to notice. And the only question is, how do we allow ourselves to notice? And I think, candles tell the way, data tells the way, but open-mindedness is necessary.
I love that. That's so cool. David, I think you've inspired me. I'm going to play around with the RSI 5. I always think the 14 is kind of a little slow and not much signal there anyway. So I like this a lot. I like this.
Cool.
Let you know how I make out.
Right on.
David, any final thoughts? Do you have a favorite chart
Or
right now,
trade.
or at least favorite chart?
Give us give the people a trade.
No, I think the gold. I mean, the problem is that I think gold just pulled back and into Friday and yesterday, and I think already, I call it short term extended, just being someone that sort of wants to kind of get involved at the right time, and I think you've got to pay attention to this stuff. But I think that these car companies, I think the EV stuff, I think you got to pay attention, because if Tesla goes out to highs here, and you continue to see developments in some of these other areas, I think this is an area that has been out of favor largely, and I think has legs if it gets going. And so I think those all those stocks, right? China, locally.
And beyond just the EVs, Ford and GM look fantastic too.
Sure they do. Absolutely they do. Yep.
I was trying to tell Spencer that. Tell Spencer he should buy some Ford shares. Some crazy.
Dude, I'm already overexposed. I drive a Ford. I don't need more Ford. I need less Ford in my life, not more.
You got enough skin in the game?
Yeah.
Nice.
Yeah.
All right. Thanks so much, David.
David.
Yeah, my pleasure. Yeah, thanks for having me. Have a great day.
Always fun talking to David. He's so smart.
Yeah.
I want to hear his presentation. Fawn said it was great out at the CMT symposium this year. So.
Oh, we should have asked him if he met up with Fonz and Sam. Oh well.
They did. They hung out.
Cool.
Yeah, for sure.
Awesome.
For sure.
Okay. Just a couple headlines that I'm seeing that we don't care about. We don't
Headlines
care about.
today, but they're all stupid. Yeah.
I know we don't care about SoftBank exiting its Nvidia stake.
Oh, you're right. Okay, big one. Yeah. So, does that concern you? Is the market selling it?
It's a perfectly good piece of content, but it doesn't mean anything. It means nothing, right? And also, if you're gonna follow anybody on Nvidia, SoftBank might be like the last person you want to follow. Okay, they very famously sold. They exited entirely. It was like pre-COVID, like 2019 or 2020, somewhere around there. Pre-AI, right?
I don't know how, but these guys at SoftBank have gone from hero to zero a couple times just in recent cycles. Like I'm talking gone a couple X during the bull cycle and then more or less blown up in the bear cycle. But they did it again. They absolutely nailed it with the OpenAI investment and Nvidia too. So, pay yourself as you go. This is great. Good for them.
Well, this is
maybe they learned a lesson from the last time.
Just to be clear, this is to fund like their OpenAI.
There you go.
Yeah, this is not.
That sounds more like SoftBank.
Yeah.
Great.
Look, billionaires are just like us. They screw up all the time. So, fund me, guy with more public investment screw ups than SoftBank. And
Interesting price action in Lyft recently too. Lyft is lifting off, completing a beautiful trend reversal.
You guys like convinced me to
Right.
stop looking at this chart, so I did. But
It looks
yeah,
great.
huh?
Looks great.
does
Meanwhile,
well.
fucking Uber's just stuck sideways. Like all it does is go sideways.
You know what? The more time goes by, the fewer and fewer stock, the fewer and fewer like COVID darlings like are stuck at or near lows. Like I'm one of these days, Zoom is gonna actually make a new high. And I'm gonna buy it.
There's
But-
a beautiful base there. There really is.
But
It
that
looks,
day is not
looks pretty good.
this month.
Zoom looks awesome.
I look at the Zoom chart honestly probably once a week, just because it was the COVID darlings, Zoom and like Peloton, right?
Spencer, Zoom is still today in an 85% drawdown.
Yeah.
From those good old days of Zoom. Everybody's zooming in their underpants.
I look at this like once a week, and like I'm gonna buy the breakout if we ever get it. I'm gonna jump that thing, but we're not there yet. I'm just waiting very patiently, I might add. So, what else did I have here? There's not much.
Oh, somebody asked 3 favorite books on the shelf. Well, we talked about one. Nissan's a good one. I always like to say Brian Shannon. And Market Wizards is great. My favorite novels up there, Infinite Jest, really good. So
Here, well, since my bookshelf is right here, you can't see it, but this is I keep this close by always.
great book, Morgan Housel.
Crap, I'm trying to. Where are the other ones? Oh,
He has one book, guys.
no. I got a bunch.
Oh, great. Yeah.
And then
Yeah.
probably
Sure.
my favorite business book ever is That Guy. I cried at the end of this book. It was like he was getting all like reflective on his life and about like the journey of Nike. Like the story of this book ends in like the early 80s. You know what I mean? So this is not a complete history of Nike. This is just like the early days, really. And he gets all like all wistful for the past and how hard the struggle was. And I was like, God damn it. It's, you know.
No, it was excellent.
I do recommend that book. I recommend all 3 of those books, but yeah, now I gotta put him back at some point.
I almost got a special edition Michael Jordan coffee table book, but
Nice.
those took me out of it. Yeah. I'm still thinking about it.
Yeah. All right. It's 9:25. We're gonna have Dr. Phil jump on in a sec, and then we'll get out of here if we can, in a few minutes, because I want to give Steve time to breathe. Then we got the open bar. So as a reminder, every Tuesday we're doing the show. If you're watching us on YouTube, you don't even have to do anything. The stream should just redirect you to the open bar, which will start at around 9:45.
And where else would you want to be than an open bar at 9:45 in the morning with me?
That's right.
Seriously, right?
If you're watching on Twitter or on stockmarkettv.com, just refresh, and we'll obviously have a new stream out for that. And then Kenny is doing his show today, so he was not around this morning, but he's doing his 11 o'clock show. The long and short of it, that's happening at 11 o'clock. So, and he does that show Monday through Thursday.
Don't miss it.
That's what we got going on.
It was $1,000, Rachel. It's absolutely ridiculous. I'll send you the link. It's so cool, though. It's basically like a picture book of Michael Jordan. All right, bring Phil on.
I'm waiting for Phil. So let's just kind of sit here. No, we're not going to sit here and silence.
All right, no, here.
Wait. Can we bring up slide? Wait. Do we have the chart? I wanted to bring up the chart from Grant. Do we have? And then I'll bring Phil on. Do we have that? I want to start doing this more. Can we just bring this up? Because if you don't get the daily number, I feel like you should. But this is one, if not the first thing I read every single morning. Partly because it goes out at like 4 o'clock in the morning every day, so it's the first thing in my inbox.
It's the first to get to you.
It's the first to get to me. But no, I think Grant's charts are fantastic, and Grant's charts will very often determine how I feel about things. I'll get my opinion about the market from Grant. You know what I mean?
There's no one better at basically giving you a bird's eye view and some quick charts of the environment that you're in. as a trader or an investor. And that's what he strives to do with this note, right?
Yep. So this is Grant's chart from today, basically showing that hey, things still look good.
Yeah. So this is measuring what these lines are measuring. If it's 4 out of 4, it means you're above an upward sloping 50 and 200 day. If it's red, it means you're below a downward sloping 50 and 200 day, which is basically just a great way to measure uptrends and downtrends, right?
Yeah.
Right. So some of these could be in sideways trends. They're not in these numbers. What Grant's showing you here is in green, the number of stocks that by that measure, which is a very simple measure of an uptrend, are in uptrends. And then in red, the number of stocks that are in downtrends. And the point he's making is that despite some weakening internals of late, really since the summer, that there are still more stocks in uptrends and downtrends. I think you nailed it. It's just a great point.
All right, let's bring on Dr. Phil and see what he has for us.
Boom.
What's up?
Did Strazza take off?
No.
Oh, okay. So
Steve?
he's still around. Okay, great. What's going on, Spence? Straz, I have a question for you. That's why.
No, I'm not going anywhere. I'm here.
Okay, beautiful. So I have a question for you.
Yeah.
I have a question for you. So we did this webinar yesterday. It was really good.
Awesome.
Really enjoyed it. Learned a lot. I learned a lot about what you're doing at Breakout Multiplier. And my question is this.
You're gonna have to join me You're gonna have to join me every time now, Phil. I don't want to go on without you. It was so good having you there.
It was a pleasure, and I'm in, and I'm going to be dedicating part of my account to trading Breakout Multiplier strategy and also a little Kenny. I'm doing it. I'm fucking doing it. I don't care. I'm just doing it because I love what you guys are doing, and I have my retirement set up in a good way. I have the Vanguard ETFs. They've been sitting there for a long time. I'm good. But what I'm going to do is I'm going to take like 50 grand and I'm going to put it in a fucking separate account. I'm not going to get really fancy. I don't need, I'll have like a little charting software, but nothing crazy, like a Fidelity Advanced or something or whatever they call that. And I'm going to trade your stuff and I'm going to do it. But here's my question.
It's a little beta sleeve. We're going to help you beat the market.
It's a little beta sleeve. It's a little high beta sleeve. It's a little bit of rocket fuel.
You're going to have a little fun while you go.
Yeah. Till daddy takes the T-bird away for all you oldsters out there. How fucking old is that? Okay. So here's my question for you though.
Yes.
This is one thing I was thinking about last night after we talked. You haven't become emotionless. Okay. I know you. You are a passionate person, right? And I'm being a little bit kind, but you're a passionate person. Like
some would say an emotional monster, but yes,
you're an emotional monster. You've actually matured a ton since I've known you, and I love you. But you're a passionate person.
Yeah.
However, when it comes to the markets, you are completely dispassionate or almost dispassionate. You will flip a switch. You will set risk management parameters like nothing. Like you're not even like you're done. There's no ifs, ands, or buts. There's no holding a loser. There's no pretending that maybe it'll come back tomorrow. There's zero of that. That's number one. And then number two is you will switch directions. You'll go from being full bore, I'm bullish, to full bore, I'm bearish, like drop of a hat. Like, what is that expression? Deep convictions, loosely held. What was that? Strong
opinions, loosely held.
Strong opinions, loosely held. You personify that. So it's dispassion. I think of the Buddhists when I think of dispassion. But talk to me. Tell me what's going, like, is that experience? Is that, do you go for a jog in the morning? What are you doing?
I spend a lot of time just thinking. But I think it's experience in the market, years in the market will make you numb to whatever ego hit you think you're taking from changing your mind. So one thing I get a lot is, oh, Steve, you're jumpy, you change your mind a lot. I say, hell yeah, I change my mind a lot. I think you have to, right? It's the business we're in. I've lost enough money doing the wrong thing and trying to hold on to, too strongly to certain opinions. I'm simply reacting to the data, and we're lucky we can flip the book really quickly with the way we do things. Right? We just go and buy something else. Really, that's the way we kind of flip our book in times like this. So I can, right? I can just wake up and say, shit, we were on the wrong side of this. We got to switch it up, maybe get short like we did back in March. And that kind of, I guess, cold or emotionless kind of behavior towards the trend and being right or wrong too has really guided us to some big gains this year. So,
well, I use the term. Thank you for telling me that. I use the term. Here's my takeaways on what you just said, and I really appreciate it. Number one, I'm using the word dispassion. You're using the word emotionless. I'm not going to go into the the vagaries and the point, like differentiating those 2 points.
Pissed off. I get cranky when I lose money. I'm just like anybody else in that way.
Right. You still are you're still are emotional, but you don't let that affect your decision making. The other thing that you said, you used the word experience. And to me, that is critical. And it's a very behavioral point of view. Like you're going to find people who talk about trading, who talk about the mechanics and the emotional emotional aspects of it, behavioral finance, whatever you want to call it, trading behavior.
Yeah.
And they will talk about emotional, but experience is a very behavioral thing. It's like getting in the reps. Like if you go, like if Shaquille O'Neal would have taken 1,000 foul shots every week while he was in high school and college, he would have been a better foul shooter. He would have been maybe the greatest player of all time because he was so great. And his weakness was that, and he never practiced foul shots, right? It was the one thing he never did. If he would have practiced a million,
he says he did. I don't know.
I don't think he did, man. He was so bad. He was such a great player. He was so bad at shooting foul shots. But the thing is you get the reps in and you learn by your errors. It's not even that you have to be exceptional, just like learning by your own errors. So if you're sitting out there watching this and you've done a good bit of training, but you haven't done a ton, recognize that every time you make one of these errors, or even better yet, every time you do one of these things right, every time you take a loss quickly, every time you flip the switch because of what you're actually seeing relative to price behavior, that is the thing. The more times you do that, the more reps you get in, the more foul shots, the more practice foul shots you take, or whatever the thing is, the better you will get at it. And I think that's, it's time in the market.
And we're just quick to protect our profits too, Phil, right? Like, so we're like aware it's been a good year. We've made lots of money. So like, we'll be really quick at the turn because I've had that experience of giving way too much back when things change. So when I see, in my account, the things we're doing today aren't working, but we were doing those same things a week ago. They were working great, right? We react and we get more cautious because our first job, our number one job, is to survive so that we can thrive in the best times. So.
Now, let me ask you this. The conventional wisdom there, and it's very hard to practice, is that you should be getting more aggressive when you're up. You should you should pull in the horns when you're down. You should play more aggressively when you're up. But you're kind of saying something different than that.
Yes, we don't want to give back too many profits. And a lot of times we're super long. So the truth is we have big unrealized gains and we have to protect them.
So you're already aggressive. You're just getting slightly less aggressive.
Taking down exposure, adding puts recently, doing a mix of things, doing less. Went away last week, get myself away from the screens. So it was choppy out there.
I know you went away last minute-ish too. Was that a reflection of the nature of the market? Like you 100%. Saw the market changing and you were like, you know what? 100%. I'm just going. Where did you go? You went like somewhere. Bahamas
I was on
or something.
The top of St. John hanging out. I was working. I was in front of my screens for about 3-4 hours every morning and then an hour again in the afternoon. But I knew that it had flipped to an environment where I wanted to do less, right? So I knew it was actually a good time. We were thinking that we wouldn't have a chance to actually get away at all this year because the market was just so good. It's one that we wanted to keep pressing on. But no, the situation kind of arose and I said, this is a great time to kind of get out of here, chill out a little bit. So worked out perfectly. Really.
So change in market. I'm going to St. John, basically.
our win rate dropped over the past 2-3 weeks. Whenever that happens, it's usually the best indicator we'll get that we want to do less, just chill out a little bit, right? Come off the gas, keep our money. We call it keep money mode because we know get money mode will be right around the corner. We want to be ready to press again when it comes. So yeah, that is a good time to go golfing, go hiking, do whatever you like to do, but kind of walk away from the screens, think about it, think about the environment, think about, our year, how we've done, what the market's doing, how things are changing, think a little bit about sector rotation. I go through my exposure. So like last week, what I was doing, probably spent 2 full days doing it, was just digging through every single position I have in my account and asking myself the question, would I buy this morning? And if the answer was no, I said, get the hell out of my account. I don't need you. Just bringing things down across the board. And I've been doing that for 4 weeks now.
How often do you do that, Steve?
Second time this cycle.
Oh, that's not as many
Nope.
times.
Things got shaky. Summer of 24. Took things down, came back in for the fall.
Love it.
Okay.
Hey, I got one more little thing for you guys. So I'm doing the most ridiculous thing ever today.
Yeah, I saw your tweet.
Yeah, I got 3 hours on the calendar this afternoon. I'm working through tax stuff for 2025.
Oof.
I know. It sounds crazy, but I'm on that shit, man. You know what I mean? Like I'm keeping what I can keep. I'm paying my fair share, but I'm going to have it all well organized. I'm going to have everything laid out. I'm going to really do a really good job with my taxes. I think I'm going to do this every Veterans Day. I'm going to put on my calendar every Veterans Day, spend a couple hours working on next year's taxes, planning, thinking about it, thinking about the, tax deferred stuff and a couple of fancy things and all that stuff.
Phil, this is the biggest expense that we have really as humans is what we pay in taxes, right? When you start making a lot of money, that's your single biggest expense. So to not spend a lot of time on it, to not try and do it well is crazy, right? So yeah, good.
I've never been an organized person. And over the last 5 years, I've gotten way better about my taxes. And, it's been a blessing. So I'm trying to think about it in terms of abundance instead of the way everybody else thinks about it, which is like, oh, it's terrible. Like I'm thinking this is part of abundance for me. So it's a beautiful thing.
Good for you. Let me ask you, do you use any of these like cool tech tools? I just downloaded some app. It's like a personal finance tracker. It helps you categorize like your expenses from different credit cards and debit cards and shit.
I'm not going to say anything about what I'm doing exactly and precisely. Okay. I'm just going to be, I'm just saying I'm working on it.
Got it.
And then after that, I'm not even saying another word.
I would say nothing can
be more private.
Nothing beats a spreadsheet in my experience.
Your
good old
big
fashioned
Excel guy, Spencer's big Excel.
Good old fashioned manual Google sheet with a whole bunch of tabs for different years and different things.
You don't use like an old fashioned trial balance?
No.
Nope.
No.
Little debits and credits do you good.
No. All right, let's get out of here. Steve is going live in 5 minutes on the open bar. We'll see you there. Thanks for watching. Yep. Go make some money. Drop us a like. Thank you, Phil.
Adios.
See you guys tomorrow.
Adios,
all right.
guys. Later.
Peace, guys.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs.